Hi traders, and welcome to the Technical Analysis Rep on Friday the 4th of June. So we find ourselves on Nonfarm Payroll Friday and the markets are probably behaving accordingly. We saw a move, probably that wasn't really consistent with what normally happens on Friday, non-farm payroll days earlier in the New York session, but we'll go into that in a second. We'll jump into the charts now and see if we can identify any opportunities before tonight's results. So I'll start out here with the Aussie USD. It finally broke through the channel that it's been promising to do for a little bit now. We can see that weakness coming through there. After that really weak candle push off, this was probably the telling sign. And I know we've talked about it over the last week and a bit that it does start to look weak now and the support may not hold. This was the telling factor, this candle here. I'll blow it up a little bit. This is what you're looking out for. So even though we're trapped in a zone, when we see a big rejection like this, all the way back to the center of the channel in basically one move, because this is a daily chart, it starts to signal that weakness, and then you can see that the moving average has really started to push together now, and now that it's actually broken through, they're not far off crossing. So if the price action stays below the moving average, and below obviously the 77, we're going to see that 2050 cross, which is a really important cross for this. The next logical zone is more than likely the 76. I'll draw a line there. So this is exactly right here is where we'll be looking, because you can see that this was previous support as well, and it seems to be hovering in that 100 point range. Now, you can see it was there for a very long time. This was a very congested area for a long time, and it makes sense now that this is probably going to be its next zone. It's finding itself already kind of in the middle of nowhere, so what you want to be doing now is waiting for a retrace back up to the 77. That would be the ideal trade here. If it gets up to the 77, we look for a change of trend on the smaller time frames, okay? So we want to see a bit of price action get up around here, and then we want to see the lightning bolt effect on a 1 hour chart. So all we need to do is get this up here. The moving averages might stop it a little bit, but I'm not going to be overly concerned about those, because there should be, it hovered there for a long time. It'd be hard to imagine that it won't be able to get itself back up here for at least a bit of an impulse move, and then it will find resistance there. That is definitely the place we expected to find resistance. I think the in the short term, the 77 to 78 is probably gone, but the market has proven us wrong before. So what it needs to do, two situations here. If it gets up to this level, starts to weaken, and you look for the change of trend in the smaller time frames, really good short down to the 76. But if it gets up on a daily close, and a daily close closes above the 77 again, then it might find itself trapped in that zone again. But it's going to take a daily candle close above 77 to convince us of that. Anything short of a daily close inside 77, and it's all short from here. And looking to trade that next zone between the 77 and 76. And I could probably see a channel playing out here as well. Not looking for really big moves on this one, just probably 50 to 100 pips again, stay within the confines of the channel. But I think this is playing the game quite nicely. All right, we'll move over to the US dollar CAD. US dollar CAD's doing its best now to push up. This has been a very congested area at around that 120 for support for a long time now. We've talked about it a lot. And it's starting to do the business a little bit. Moving, the MACD is starting to rise. As you can see, the moving average is starting to converge to 12 and the 26, of course. So that's a good sign for it. I really like this from the standpoint that it doesn't really want to go much lower. It's had a test several times. Like, this is a daily chart. We're talking about weeks and weeks of price action here. So it's found itself at the 20 moving average. Earlier in the week we were talking about the scalps. So you should have been able to get at least 3 good scalps up to this level on the smaller time frames. The ones we always talk about, lightning bolt effects on the 15 and the 1 hour back to the 20 moving average. You should all know this by now. So this is the level that we're going to be talking about. The 20 is where it's going to stop, if it's going to stop anywhere. This is a really important zone for obvious reasons. Now I'm going to draw the horizontal line here. I'm going to spend a little bit more time on these ones today because, it's very low price action on a lot of these pairs. So I'll spend a little bit more time on each of the currency pairs that we look at and just give you a bit more in-depth looks at it, okay? This is the one that you can see here. Obviously, we've got resistance right through here. Big resistance too. Like, this has had, an awfully difficult time getting through this top here. The 20 moving average now is actually backing it up. This is as close as it's been to breaking a 20 moving average, since basically April. So you can see here, this has been a very big progression down. This is as close as it's been to breaking up. And if it breaks up, she's going to go long, and she's going to go long for a bit. So we definitely want to be setting our alerts here. The scalps that we should have got here, you should have already been out of them by now. Now what we need to do is see price action, let it fulfill its destiny, and break up above the 20 moving average. A daily close above this level is what we want. If we get that daily close above the 121 and above that 20 moving average, it's going to be effectively closing above all of these highs, which is exactly what we want, right? We need to see this level broken. If it does that, it really opens it up to about the 123.20. I'm not even sure the 123.20 will hold it, but that's probably the first target, because it's difficult to see it sustain a move any bigger than that with some sort of resistance, and that was a point of resistance previously, so I would expect it will do it again. That was a whole week of resistance there, so we definitely will be looking for that as a target. Failing that, if it does reverse from here on the smaller time frames and you see a sequence of lower highs and lower lows, only on the 1 hour, I wouldn't take anything less than 1 hour for a change of trend here. Then the obvious target is these lows again. I wouldn't be going any lower than this. But yeah, you've got still about 80 pips there of action. So you could definitely get a couple of scalps in there if it does reverse. But the preferred trade is definitely to break above the 121 with a daily candle, because that really opens up the top end. I think a really good couple of trading opportunities coming up, probably especially into next week. All right, we'll move on now to the US dollar yen. This has been the golden child. It's done everything that we've wanted it to do. Very, very pleased with this one. I love it when currency pairs behave themselves as they should in an orderly fashion. We had the big rejection candle here. That's effectively a dragonfly doji. Yeah, or I mean, it's a very small hammer, but a dragon. You very rarely do you get the perfect dragonfly doji, as you can see there. The right off the 20 and the 50. That candle here was the one that broke this level here. The level we needed breaking was broken on this candle here. So it has found itself at a bit of a flat spot now. You can see the move. Like I said, you got in on this candle. You've already got that. Now is not the time to be getting in, because the next point of resistance is very, very close. So when you go to a daily now, the next point of resistance is only a handful of pips away. Okay, so this is the whole point. This is not where you want to be taking a trade. Yes, it could go in your favor, but the problem is, you're going to have resistance right in front of you, and that's not how you want to be entering a trade. You don't want to be going backwards as soon as you actually get into a trade, okay? That's not the right idea. So what we need to do is either wait for a bit of a pullback, maybe down to the 110 again. If we get that, that's reasonable. I can understand that. You can go down to a 1 hour time frame. So you can see here, if we get a pullback down to the 20 moving average on the 1 hour chart, even down to this level here, which is a bit of a roll reversal, 110, sort of 15. I would like to see the 20 though. I'd want to see a bit of a pullback from this point on, because you know you're going to get a bit of resistance here. It's got stuck here. So I'd want to be seeing it come back down to around that low 110s, and then off we go again to probably the 110.50 would be the target. The big move's already happened though. So yeah, it's got another 20 or 30 pips in it before it gets real trouble. But I think that now is not the time to be entering. You're going to be waiting for a bit of a pullback on this one before you attempt to get in again. So at the very, very least, it wants to be coming back to the 20, and then look for a very small directional change of trend on a 15-minute chart before you look at going long. Okay, so pretty good trade. All right, we'll go to the dollar index now. So the dollar index is, this is behaving itself as well, which is really good. Had the big breakthrough candle through the 20, which we finally did. We've been waiting for this for a very long time, which is awesome. So it's done it. Moving averages are doing the right thing as far as the MACD is concerned. Signal line is well and truly out, and the histogram is shrinking very, very quickly. Very, very positive signs for it. This was obviously the target. So this is going to relate very strongly, of course, to the dollar base pairs, but more importantly to the euro. We're going to have a look at that in a second. But this is the breakthrough candle that we wanted. I'd want to see probably a pullback to the 20 now, small change of trend on a smaller time frame, and then off we go again to, at the very least, the level of 90.80 is the first point of call. Okay, so pretty straightforward. You don't have to spend a lot of time on the dollar index, because the euro really tells the story on this one. Let's go on to the euro now. It had the all-important break of that 20 moving average, of course, the complete inverse of the dollar index. This was starting to look weak. It really was. And, you know, we kind of predicted that it was going to do this, which is good. It's good when technical analysis plays the game, because it really opens itself up to the next level. You know, that's the whole point. The next level for this one is around, you know, the 120 again. This is what we're aiming for. If we see, what we want to see now is basically a pullback to the 20 moving average on the daily from below it. So if we get a pullback up to the 20 moving average, look for a small reversal change of trend, and then off we go again. that's a good trade. Look, you can definitely do a trend line. I mean, there was a trend line there, joining up these bottoms, right? There was no worries about that. But we want to be, that was it was very steep because we had a couple of very big wiki candles. So if we were going to join up the absolute bottoms of that trend line, okay, it really coincides with the 20 moving average. So when they overlap, it's a good idea. Trend lines are a problem because they can be very subjective, but when you got a moving average backing it up, it makes all the difference. Okay, so we know that this point is a pretty strong level, right? We're going to have to do a horizontal line to see that. So I'll do that just for the exercise. You can see here that we had very, very strong resistance again. It was support through there. It stands to reason that it will probably try and test it again at some point throughout today. If it gets up here and tests it, we've got the 20 moving average. It's the perfect result really for what we're trying to achieve, is having a lot of resistance at the same point that we want to try and sell off. Okay, so look for that change of trend at that level. So if price gets up here, don't automatically short it. Go to the smaller time frame. Look for a change of trend on a 1 hour or even a 15 minute will be good enough at that level. There's enough resistance there, and then we look to start shorting it down to around the sort of 120.10, something like that. It's pretty good trading on the euro. I think there's some pretty good signs ahead for it, and of course the MACD is telling the story that we want it to tell. All right, the last one we'll have a look at is the S&P 500, of course, having a bit more of a sell-off now. Look, it had a big drop throughout the session, then it's pulled up. This is a 1 hour chart. I'll go to a daily to make it a little bit clearer. It's certainly starting to struggle a little bit to go higher at the moment. You can see we've had 2 weeks of effectively nothing. It's been in a pretty tight range. It's struggling to break the high there or the new high of 42.38. So we want to be very mindful of that. It's sitting right on the 20 at the moment. If it breaks the 20, the 41.30 is the target that we'd be going for if it does. So if we get a daily close below the 20 moving average after non-farm, then we can start aiming for the 41.30. Just be very mindful. It's non-farm payroll today, so the market's probably going to be fairly slow. But after the fireworks are over, when they announce the numbers, then hopefully we'll start to see some of these trends kick in, and we've got all our key levels marked up, so we know certainly what to aim for when the market does start to move. So I hope everyone's had a great week's trading. I think we've had some really good small opportunities on the scalping front, and some key levels have been broken ahead of non-farm. So we should see some really, really good trends starting on Monday and Tuesday of next week. And I think we'll start to get these key levels being tested again, which gives us all the opportunities that we're looking for on these majors. Thanks, everyone. Have a great weekend, and I'll talk to you next week.